yesterday was Trump's Liberation Day in America, in which tariffs were placed on hundreds of countries around the world. In today's video, I'm going to break down what that means for digital assets and global adoption of Bitcoin. Now let's get into it. To start, let's get up to speed on the tariffs that were issued if you weren't following that news. So these range from, on the upper end, Cambodia with 49%, Laos with 48%, down to 10%. And some notable ones to call out are China with 34%, which actually stacks on previous tariffs, so the real rate on Chinese goods being imported to the United States is higher. Vietnam with 46%, where many things are manufactured, especially apparel, is also extremely notable. And you can see the full list here, and you can see that it's based on a calculation related to the trade deficit between the United States and these other countries. The goal, of course, being either for these countries that have tariffs to remove them, or, and I think we'll talk about this more, I think a huge part of the goal is actually to reshore manufacturing into the United States, and we'll get into more of that later in the video. But how did this affect the markets? After hours trading, tech stocks were down significantly, 5 to 10%, pretty much across the board. And now looking the next day, we can see that a lot of stocks are down quite heavily. We've got Tesla and Nvidia down over 5%, Ford down 3%. I'm just looking at the highest volume stocks right now. American Airlines down 8%. Pretty much everything is down. Gold, I guess, is up, and as well as a few others. So things are down pretty bad. And as of a few minutes ago, over $2 trillion was erased in market cap from the S&P 500. And naturally, crypto has crashed along with this, right? I mean, crypto, as we've talked about, Bitcoin, a lot of its value proposition is supposedly as a digital store of gold, and I think potentially in the long run it will get there. But right now, it basically trades as a beta to the Nasdaq in many ways. And so Nasdaq is down, stocks are down, tech stocks are down, Bitcoin is also down, and in fact, other major cryptos, Sol, ETH, in many cases that they're down, or in pretty much every case, they're down more than Bitcoin itself. If we look at the total market cap for altcoins, we can see that it's approaching its lowest point since November right now. It's basically been cut in half since its peak in December at this point. This is the market cap of all cryptos outside of the top 10. And so what to do? What does this mean? What's the implication of this for digital asset markets going forward? Well, my perspective is that this is, in a way, pushing digital assets back towards fundamentals, and three fundamentals in particular I'm going to highlight. You've got the fact that crypto allows for global distribution, and the world with all these tariffs, and pretty soon what's going to happen next is countries are going to start to implement capital controls. Tariffs, capital controls, the world is getting smaller in a way. You're going to have more goods manufactured domestically or nearshoring, where they're manufactured in nearby countries, and you're going to have, I think, probably less international trade than there was in the past. But crypto still allows for global distribution. It allows people to purchase assets globally, and it's extremely difficult to censor and shut down crypto and stop capital movements that way. To that point, it's also going to push a demand for uncensorable money and privacy as well. And privacy coins have been like the perennial underperformers in crypto, but I'll show you guys in a minute. Privacy coins have actually been notable outperformers recently. And I don't think the market's totally caught on to this yet, but I think this is some people recognizing that privacy coins actually serve more of a clear purpose in a world where you may need to move money across borders without anyone being able to track it. I'm not saying that I can endorse anything that is illegal or you're not supposed to do, but if you're just looking at the market demand, that's a pretty clear use case for some of these things. And then we've also got the fact that this offers some protection from fiat currencies. The dollar has dropped on this recent news, and we'll talk about why that is. But it also potentially sets you up for a post-fiat world, what replaces the dollar, and we'll get into all three of these points. So let's go through them one by one. So first, we've got global distribution. This is from earlier this week. letter from Larry Fink, chairman and CEO and co-founder of BlackRock, largest asset manager in the world, to shareholders. And he talks about a couple things. He talks about the potential for Bitcoin to replace the dollar as the global reserve currency. And he talks about tokenization. All right. And I talked about this in my last video too, but I think it's worth highlighting again in light of recent news. So he says tokenization is democratization. So pull out the buzzwords for a second. What exactly does this mean? Well, think about this. You've got all of these assets that are available, say, to investors in the US, and they're available to people in a number of other countries as well. But what percent of the world, for example, has access to easily purchase US treasuries, stocks, and other assets right now? I don't know, probably not very many, right? I mean, if you actually did the math, I would guess fewer than 50% of the world actually has the ability to purchase those things if they want to, maybe much less than 50%. I mean, if you live in a country like the US, you might not realize that in most of the world, people aren't even using credit cards, right? And so this is going to become even harder as countries implement controls. But with tokenization and the ability to buy things across borders and the move from analog to digital in finance with crypto, suddenly you're going to have these sorts of financial or otherwise digitally recorded assets. They'll be available globally. So I think that that's one thing that crypto is going to benefit from. It's going to be one of the few industries that's actually still truly global with these changes. And you're already seeing crypto increase the global distribution of certain assets in the form of dollars. Total stablecoin market cap is up $750 million in the past 7 days. So these are tokenized fiat currencies, mostly tokenized dollars. Like vast majority is tokenized dollars. And you can see this is at $235 billion now. And this has actually been highlighted by the US Treasury Secretary as one of the ways that the US is going to try to keep the dominance of the dollar, because it's basically making the dollar's distribution global, where people around the world can now use it to transact daily. And then you've got the uncensorability. So let's look at the top performing categories recently. So, most things are down. However, maybe there's some things that are actually up or close to flat. So you've got tokenized gold. Tokenized commodities are, of course, up because gold is at an all-time high. Some others, random ones like storage, I'm not going to dive too much into that. Stablecoins are, of course, up. Right below these, though, you've got privacy. Privacy is one of the top performing sectors in crypto over the past week. And to focus on the top two, you've got Monero, the largest by far, and then you've got Zcash. And Zcash is actually up over the past week. But Monero is the biggest, so I'm going to focus on it. If you actually pull back and look at Monero here, you can see, it's below its all-time high, but it's actually near its cycle high at the moment. It had its previous peak back in 2021, its all-time high all the way back then. If you look at market cap, it's a little bit less far from its all-time high. But this has just been growing over the past months, even as the market has dipped. And you can see that here. And if you convert to Bitcoin, as you generally should, if you want to get a like true read of how something is performing compared to the crypto market, then we can look at it compared to Bitcoin. We can see, over like the maximum, it's not doing great. But over the past few months, this year, Monero has actually done very, very well compared to Bitcoin. And so what this means is that there is some segment of people that are deciding they want to make sure they have access to a token that they can transfer completely privately and anonymously. And I think that this is another example of the crypto market getting back to fundamentals here. So I personally don't hold any position in this, but I think that there's, privacy is a sector that I'm going to be looking at more. There's been some interesting launches like Nillion recently, which does blind computing. You have Zcash as well, which I'm not truthfully totally up on, but you have a very clear narrative in a world where there's controls about moving things between countries, where people would actually find a need for these privacy coins. And it's arguably the best technological solution in existence to anonymously move money around the world. And then you've got the third point, which is the protection from fiat currencies. So let's hop back over to TradingView for a second. We can see gold is doing extremely well. Gold has just been on a absolute tear recently. And I think, there's a lot of people who perhaps hold Bitcoiners, who may be disappointed that Bitcoin's not following suit. Because if you look at DXY, and this is all going to tie together. You look at DXY, so dollar index right now, over the past few months, it's down quite significantly, especially over the past day. And if you know anything about economics, it makes sense why this is, because when you're importing things to your country, you need to buy the assets from the country. And I think that gold is doing what a lot of Bitcoiners had hoped that Bitcoin would do in these sorts of environments. Because you can see here that DXY is down very significantly over the past few days. Over the past 6 months, it had run up and then has since, over the past couple months, really taken a hit here. And the thesis for a long time has been, as the dollar goes down and the dollar loses its position in the world, Bitcoin will benefit. But I wouldn't make too much, I'm not making too much personally, out of a short-term trend versus the continued long-term tailwinds. And so what do I mean by that? Well, to get back to our chairman's letter from Mr. Larry Fink earlier, he has an entire section on it dedicated to, can Bitcoin eat away at the US dollar's reserve status, highlighting the growth of the national debt, which is something that Bitcoiners have been focused on for, basically the entire existence of the asset at this point. And so now you've got people in major positions of power start to realize that probably the US dollar is not going to be the reserve currency of the world forever, right? There's been many reserve currencies over the centuries. You had the pound, now you've got the dollar. They don't typically last forever. However, there's not really a better fiat currency to replace Bitcoin right now. Are people going to switch to using the euro? Maybe some of them will. They're going to switch to using Chinese currency, maybe in certain parts of the world. But there's not really a currency that right now is well positioned to replace the dollar as something that's actually used globally. Bitcoin, or a different digital asset, may actually be better positioned because it's also neutral. It's neutral. It's got a predictable inflation rate. It's not controlled by a single country. And I think that if the world gets back to being multipolar, then you'll probably get to a point where people want some sort of neutral currency. And that could be Bitcoin. It could be some sort of gold-backed digital asset. Maybe there's even another asset that could take its place, but Bitcoin certainly seems to be the leader right now. And I think that this trend of countries putting in tariffs, US or the world getting smaller, I think that's going to accelerate this process of people moving away from the dollar and moving into a post-fiat world. The problem for the United States, unfortunately, if the world shifts away from the dollar, is that the manufacturing sector in this country has been completely decimated over the past few decades. If you look at the total number of manufacturing jobs, you can see that in 2000 there were around 17 million, and today that's down to around 12 million. So that's 5 million jobs gone. And the reason that works, and the reason it's been able to work, and quality of life has been able to go up for a lot of people even despite that, is that the dollar is the reserve currency of the world. So people still want dollars. In a way, we export dollars, we export services, and we import physical goods that are made for cheaper in other countries. The problem then is, if the dollar loses its value, if the dollar stops being the reserve currency of the world, then suddenly that system doesn't work anymore, and we're left being unable to buy many of the things that we already are. So my theory on part of what's going on here is trying to reshore American manufacturing in anticipation that eventually the dollar is no longer going to have its status. If you want more numbers and news-based updates on the crypto market, be sure to check out my newsletter, newsletter.dynamodefi.com. I include recommended readings, on-chain metrics, and more every single week. And for more videos like this, be sure to like and subscribe. Until next time, this is Dynamo DeFi.